I used to think getting rich from trading meant being glued to my screen, making dozens of trades a day. I was dead wrong, and it cost me. It wasn't until I stumbled upon a legendary experiment from the 80s, one that turned total beginners into millionaires, that the secret finally clicked. This is the story of how I had to unlearn everything I thought I knew about the markets and adopt a get-rich-slowly strategy that completely changed my life. I was addicted to the buzz of day trading, but my account balance told a much sadder story. It was a life of constant anxiety, where the wins felt too small and the losses felt catastrophic. I was trapped in a cycle of hope and despair, fueled by caffeine and financial news that left me burned out and broke. I was so sure that if I could just be faster, smarter, or find that one perfect indicator, I'd finally crack the code. The truth, I was looking in the completely wrong direction. The answer wasn't about speed, it was about stillness. It wasn't about being a genius, it was about discipline. The answer was buried in a trading legend about a group of novices who were handed a simple set of rules and went on to make hundreds of millions of dollars. They weren't born with a special gift. They were taught. And what they were taught is what I'm going to share with you. This isn't just another trading strategy, it's a total paradigm shift. This is how I stopped trying to get rich quick and instead actually started getting rich slowly. For years, my mornings didn't start with a calm cup of coffee, but with a jolt of pure stress. The pre-market hours were a frantic blur of news tickers and futures charts, trying to predict the unpredictable. I was your classic day trader, another soldier in the army of hopefuls who believe wealth is forged in the fire of volatility, one tick at a time. My screen was a mess of flashing numbers and jagged lines, 5-minute charts, 1-minute charts, you name it. I had so many indicators running, RSI, MACD, Bollinger Bands, that the actual price was almost an afterthought. I told myself this was what it took. The top traders, the ones in the movies, they were masters of this chaos. Financial gladiators, wrestling profits from the market's jaws with pure willpower and lightning-fast reflexes. I wanted to be one of them. I truly believed I could be. My strategy, if you can even call it that, was a chaotic mix of scalping and momentum chasing. If a stock was moving, I was on it. I'd jump in, my heart pounding, aiming for just a few cents of profit. My finger hovered over the buy and sell buttons like a nervous wreck, just praying for a quick score. And sometimes it worked. I'd pocket 50 or $100, and the dopamine hit was instant. It was all the validation I needed. See, you can do this. But the losses, the losses were a different beast. A trade would turn against me, and that small, acceptable loss I'd planned for would suddenly feel like a personal failure. My discipline would just crumble. A greedy little voice would whisper, "It'll come back. Just hold on." Hope is not a strategy. What started as a quick scalp would turn into a day trade. As the loss grew, that day trade would become a desperate swing trade, a prayer that tomorrow would bring a miracle. It's a classic mistake, feeding a losing position. It's like trying to put out a fire by throwing more money at it. I remember one trade with painful clarity. A biotech stock had released some promising data, and the online chatter was electric. This is going to the moon. It was pure FOMO, the fear of missing out, and it's one of the most destructive emotions a trader can feel. I was drowning in it. Against my better judgment, I bought in right at the market open, at the absolute peak of the frenzy. For a few glorious seconds, it ticked up. I was a genius. Then came the reversal, swift and brutal. The same people who were screaming, "to the moon," were now panic selling. The price collapsed. I completely ignored the stop loss I had set. I was just frozen, paralyzed by how fast it was all happening. I told myself it was just profit-taking, a healthy pullback. So I held on. I watched my account value plummet by hundreds, then thousands. The physical sensation was sickening. My stomach in knots, my palms sweating. By the end of the day, the stock was down 30%, and I had lost more money in 6 hours than I made in a month at my job. I finally sold, not out of strategy, but out of pure emotional exhaustion. I just couldn't take the pain anymore. That night, staring at the ceiling, I felt like a complete failure. Reckless. Stupid. My dream of financial freedom felt like a cruel joke. My trading journal was a graveyard of similar stories. Impulsive entries, ignored stop losses, and revenge trading. Jumping back in after a loss to win it back, which almost always made things worse. I was a walking statistic, proving why 90% of traders fail. I was burned out, my confidence was shattered, and my account was a shadow of its former self. I had hit rock bottom, and it was from there, in that pit of despair, that I finally became open to a different way. Defeated, I stepped away from the charts. The constant noise of the market was replaced by a silence filled with my own feelings of failure. I started reading, not about new indicators, but about the history of the markets, the philosophies of legendary investors. I was looking for an answer, any answer, that didn't involve staring at a 1-minute chart until my eyes bled. And that's when I found it. A story from the early 1980s about two titans of the commodities world, Richard Dennis and William Eckhart. Dennis, known as the Prince of the Pit, had reportedly turned a stake of less than $5,000 into over $100 million. He and Eckhart had a long-standing argument. Could great traders be made, or were they just born that way? Dennis was convinced he could teach anyone to be a great trader. Eckhart disagreed, believing it was an innate talent. To settle the bet, Dennis devised a radical experiment. He put an ad in the Wall Street Journal, looking for trainees. He selected a small group. Reports vary between 14 and 23 people, from all walks of life, most with zero trading experience. He just returned from a trip to Singapore, where he saw turtle farms, and quipped that he could grow traders as efficiently as those farms grew turtles. The name stuck. They became the Turtle Traders. For 2 weeks, Dennis taught them a complete, 100% mechanical trading system. It wasn't about predicting the news or feeling the market. It was a set of concrete rules that dictated everything. When to get in, how much to risk, when to get out. The system was built on a simple but profound idea called trend following. Instead of predicting where the market would go, you just wait for a strong trend to emerge and ride it for as long as possible. It meant ignoring the day-to-day noise and focusing only on the big moves. Then, Dennis gave them his own money to trade, with accounts up to $2 million. The results were legendary. Over the next few years, the Turtles reportedly earned an aggregate profit of over $100 million. Some sources cite figures as high as $175 million. Dennis had proven his point in spectacular fashion. Great traders aren't born. They're trained to be disciplined. Reading this was like a lightning bolt to my brain. It was the aha moment I'd been searching for. Everything the Turtles did was the complete opposite of my own frantic, failed approach. I was trying to predict. They were taught to react. I was obsessed with short-term noise. They focused on the long-term trend. I made dozens of emotional decisions a day. They made a few, based on rigid rules. My trading was driven by fear and greed. Theirs was driven by logic. I was trying to get rich quick. They were taught to get rich slowly. The turtle experiment proved you didn't need to be a genius or have a special intuition. You needed a solid system with an edge. And most importantly, you needed the unwavering patience to execute that system flawlessly. This was my revelation. I had been playing the wrong game all along. The path to wealth wasn't about being the fastest gun in the West. It was about being the patient hunter. The story of the Turtles gave me a blueprint. It gave me hope. It was time to unlearn everything and start from scratch. The Turtles' story wasn't just inspiring. It was a concrete action plan. The exact rules have since been detailed in books like Way of the Turtle by Curtis Faith, one of the original Turtles. I dove in, determined to rebuild my entire approach. I was going to stop being an emotional gambler and start acting like the casino, calmly executing a strategy that I knew had an edge over the long run. Honestly, the hardest part wasn't learning the rules. It was unlearning my terrible habits. Day trading had wired my brain for instant gratification. The turtle strategy demanded the opposite, a level of patience that at first felt like pure boredom. The first mindset shift was huge. Think in probabilities, not certainties. I used to think every loss was a personal failure. The turtle philosophy teaches that losses are just a cost of doing business. A trend-following system will have lots of small losses, but a few massive wins that more than make up for them. I had to learn to see losses like a grocery store sees spoiled milk, an expected part of the operation. To do this, I started a new trade journal, but this time I logged my emotions. Before each trade, I wrote down why I was taking it, based on the rules, and how I felt. This was a game changer. It became a mirror, showing me the ugly patterns in black and white. I saw how boredom led me to force bad trades, or how a loss triggered a desire for revenge. I also developed a mental pause. Whenever I felt FOMO or fear, I'd literally step away from the computer. I wouldn't let myself act until I could challenge the thought. Is this a valid signal according to my rules? The answer, 99% of the time, was no. This simple pause slowly broke the link between my emotions and the buy-sell button. With my head getting clearer, I focused on the rules. I taped them to my monitor. They were my new Bible. The core principles were non-negotiable. Rule 1. The entry trade breakouts. The entry signal was purely mechanical, by when the price breaks above a recent high and sell short when it breaks below a recent low. The idea is that a big breakout is often the start of a major new trend. No news, no opinions, just the rule. Rule 2. Risk management. This was the real secret. Richard Dennis taught the turtles to size their positions based on the market's volatility, a concept he called N, based on the average true range or ATR. Before any trade, you calculate how much you'd lose if the market moved against you by a set amount. Their stop loss was 2x ATR. You then adjust your position size so that this loss is never more than 1% or 2% of your total account. This was revolutionary for me. It meant the risk on every single trade was equal. This one technique ensures your survival. You can withstand dozens of losses and still be in the game for the next big win. Rule 3. The exit. This is the classic trading mantra, but the turtles lived it. The stop loss was mandatory. If a trade moved against you by 2x ATR, you were out. No hope, no prayers. But the part that makes you rich is letting winners run. This was the hardest for me. My old habit was to snatch tiny profits. The turtles were taught to do the opposite. Rule 4. Add to your winners. A key part of the turtle strategy was adding to winning positions. If a trade went your way by a certain amount, typically 1/2 ATR, you'd add another unit. You could add up to 4 units per trend. This is like pouring fuel on a fire, dramatically amplifying your profits during a strong trend while still managing risk. Implementing this system changed everything. I spent maybe 30 minutes at the end of each day running my scans and adjusting orders. The rest of the day was my own. The stress, the anxiety, the stomach-churning fear, it just evaporated. It was replaced by a quiet confidence in the process. My equity curve changed, too. It was no longer a wild mess. Instead, it became a slow, steady grind upward. There were losing streaks that tested my patience, but I stuck to the rules. And then a trend would catch. I'd get a breakout and just sit. I would watch a position grow from a small gain to a life-changing one over weeks, my only job being to trail the stop-loss order behind it. The first time I closed a single trade that paid for my last 20 losses was the moment it all clicked. I had finally built it, my own get-rich-slowly machine. It required a complete surrender of my ego, but the reward wasn't just financial. It was freedom. Freedom from the screen, freedom from stress, and freedom from my own worst instincts. Look, I get that this might feel like discovering a whole new world, and it can be intimidating. You've heard my story, and if it resonates with your own struggles, I want you to do one thing today. Not tomorrow, today. Get a notebook or open a document, and for your very next trade, journal it. Write down the rule that justifies it. Write down how you feel, and commit to logging the outcome, win or lose, without judgment. This is the first step. Patience is a muscle, and this is your first workout. And if you want to keep going on this journey, consider subscribing. I'm always breaking down the psychological hurdles and systematic approaches that separate the traders who make it from the 90% who don't. Your journey to patient, profitable trading starts right now. So, what's the real secret to getting rich slowly in the markets? It's realizing that success isn't one big event. It's a process. It's not about finding a magic entry signal. It's about a complete system that covers your entries, exits, and most importantly, your risk. It's a lesson proven decades ago by Richard Dennis and his turtles, and it's just as true today. My journey from a hyperactive day trader to a patient trend follower taught me that the market doesn't reward speed. It rewards discipline. The get-rich-quick mindset, fueled by FOMO and a need for constant action, is a direct path to ruin. It's a siren song that leads countless traders to crash on the rocks of their own emotions. The get-rich-slowly approach is a conscious rebellion against that. It's about accepting that your most profitable action, most of the time, is to do nothing at all, to simply wait. It's about building a system, trusting it, and having the guts to execute it flawlessly. The goal isn't to win every trade. The goal is to survive the losses so you can be there for the massive, infrequent trends that generate real wealth. The core philosophy of the turtles, trend following, strict risk management, and emotional discipline, is timeless. It's a framework for turning trading from a stressful gamble into a calm, methodical business. The greatest irony is that by embracing the idea of getting rich slowly, I started building wealth more consistently than I ever thought possible. Patience in trading doesn't just make you money. It makes you sane. And in the end, that's the greatest profit of all.